Imagine waking up tomorrow morning, grabbing your phone, and the headlines say a global war has officially begun. The news is absolute chaos. The markets are crashing, banks are limiting withdrawals, and global supply chains freeze overnight. When the world feels like it's on fire, it is incredibly important to stay calm and level-headed. The truth is, when people are losing their lives in a global conflict, the absolute last thing they probably want to think about is money. But here is the reality. When fear takes over and the markets start doing crazy things, everyday people make massive financial mistakes that ruin their futures. Most people would completely panic in this scenario, but a very small group of people would already be financially prepared, not because they have a crystal ball to predict the future, but because they understand exactly how money behaves during a global crisis. Today, there is no dramatic intro and no sponsored fluff. I'm going to give you the ultimate blueprint to protect your money, your assets, and your family before things get worse. We are going to talk about the historical truth of what happens to your money during a war and the exact moves you need to make right now to become financially bulletproof. If a major global conflict breaks out, the very first thing that disappears during uncertainty is liquidity. During economic shocks or wars, companies lay off workers, governments can freeze accounts, and banks tighten up their lending. If you do not have cash reserves, even a short disruption in the economy can completely destroy your finances. You need to build a massive, real emergency fund immediately. A good rule of thumb is to have 6 to 12 months of living expenses saved up. This money cannot be invested, it cannot be locked in crypto, and it cannot be tied up in risky assets. It needs to be accessible cash that you can use immediately. Why? Because when everyone else is panicking and trying to withdraw money at the exact same time, the banks do not always move fast. You need to be your own bank when the system slows down. Debt might feel manageable when the economy is stable and your job feels secure, but during crisis periods, interest rates rise, incomes drop, and lenders become incredibly aggressive. If a global conflict disrupts the economy, the absolute worst position you could possibly be in is having high debt combined with an unstable income. You need to focus right now on eliminating your credit card debt, personal loans, and high-interest liabilities. True financial resilience doesn't start with how much money you make. Financial resilience starts with owning your income instead of owing it to a bank. When you don't owe anyone a monthly payment, you have the ultimate freedom to adapt. Right now, you're probably watching the terrifying headlines and thinking, should I sell everything? Should I go completely into cash and wait for things to get better? Please listen to me very carefully. Trying to time the market around a war almost never works. I know it sounds crazy, but historically, markets actually do not crash the way people expect them to during major conflicts. In fact, in a lot of cases, they recover really fast, sometimes even going up during the war itself. Let's look at the actual data. After Pearl Harbor in 1941, the stock market dropped about 3% the next day, but it fully recovered within a single month. During the Cuban Missile Crisis in 1962, when the world was literally standing on the edge of nuclear war, the market dropped 7% but recovered in just 10 to 12 days. When Russia invaded Ukraine in 2022, the S&P 500 dropped 2.6% on the day of the invasion, but within 1 month, it had already bounced back and was trading higher than before the war even started. Why does this happen? Because investors hate uncertainty more than anything else. Fear hits the hardest before the worst-case scenario happens, but once that fear turns into reality and the uncertainty is gone, the markets usually stabilize and start moving forward again. Even during Black Monday in 1987, when the market dropped a terrifying 22% in a single day, within 2 years, the market not only recovered, it completely doubled. The worst mistake you can make right now, even worse than terrible timing, is sitting on the sidelines in fear and staying out of the market completely. Let me tell you a story about 3 hypothetical investors, Tiffany, Brittany, and Sarah. They all invested $500 a month into the S&P 500 starting in 1985 and kept going for almost 40 years. Brittany was the genius who had the best market timing in the world. She only invested at the absolute bottom of every major crash. Tiffany had the worst luck imaginable, dumping her savings into the market right at the peak before the 6 biggest crashes in history, like the dot-com bubble and the 2008 financial crisis. And then there was Sarah. Sarah didn't try to time anything. She just set up an automatic $500 a month contribution and never touched it, investing consistently through every up and down. Who won? Brittany, the genius, ended up with $3.3 million. Tiffany, with the worst timing, ended up with $2.1 million simply because she never sold her investments. But Sarah, who never tried to time anything and just stayed consistent, ended up as the absolute winner with $3.5 million. Time in the market beats timing the market every single time. If you let fear keep you out of the market, you will lose. If you invested $10,000 in the S&P 500 from 2003 to 2022 and left it alone, it would have grown to over $64,000. But if you missed just the 10 best days in the market over that 20-year period, your return dropped in half to about $29,000. And the crazy part? The best days usually come right after the worst ones. If you panic sell, you almost always miss the rebound. Keep dollar cost averaging and stay invested. During extreme crises, governments have historically introduced emergency financial controls. This includes things like withdrawal limits, currency restrictions, and capital controls. Because of this, many people keep a portion of their wealth outside of the traditional banking system. The goal isn't paranoia, it's pure financial flexibility. Diversifying into cash reserves, hard assets, and global investments ensures that one event won't wipe out your entire financial life. But true wealth isn't just numbers on a screen. When supply chains break down, the price of essentials can spike overnight. You need to secure essential supplies, which means having food reserves, medicine, and basic household items. Buying these gradually over time is far cheaper than trying to buy them during a panic. Finally, ask yourself one question. How secure is my income if the global economy slows down? If global tensions escalate, industries like tourism and luxury spending will suffer faster than others. You must consider building multiple income streams and developing skills that remain valuable during recessions. The most valuable asset during uncertain times isn't gold, and it isn't stocks. It's adaptability. The people who survive economic chaos are the ones who can adjust quickly. Invest in your skills and education because when systems change, people who can adapt financially always recover faster. No one knows for sure if a massive global war will happen, but history tells us one thing clearly. Major crises always arrive right when most people feel comfortable and unprepared. Preparing your finances right now isn't about giving in to fear. It's about taking responsibility. When uncertainty arrives, the people who survive financially are the ones who prepared before the headlines appeared. Stay calm, stay invested, and stay smart. Start executing these moves today. See you in the next one.